All right, welcome again. I'm Charlie Mattingly here with John Schultz, and we are with Leading Edge Financial Planning. We're going to talk today about Southwest Airlines loss of license, what that benefit is, what are your choices as a Southwest pilot, and how do you change the setting? Mainly, John, do I receive a taxable benefit or non-taxable, tax-free benefit? Those are the choices that we have. You are going to get the loss of license benefit if you're a pilot and you've been here 30 days or more at the airline at Southwest. You'll get that benefit. The benefit is free. I use air quotes, John, free to the pilot because the airline pays the premium, but there will be a cost in the form of taxes if you choose or select the tax-free benefit. Okay, that was way too much for an intro, John, but let's jump in. The most important things for loss of license is that it is a benefit that covers you if you lose your FAA medical, and it covers 50% of your pre-disability earnings or MBE. I think we've seen the PDE and MBE, and best we can tell, those are the same. Half of your pre-disability earnings, and I believe that's about a 1 year look back. If you made $200,000 for the last 12 months, you can just assume that your loss of license will be $100,000. Math is pretty easy there, right, John? So, anything, John, so far as loss of license, the benefit itself that we didn't cover yet?
Yeah, it's a 60-day elimination period before it kicks in. So last video we talked about short-term disability and sick time. If you want to check that out, we go into more details about covering the going up to the 60 days.
Excellent. And that's a big deal because under the last contract, it was I think it was a 6 month elimination period. So very, very different. And so loss of license. Now, here's the other thing. I don't know if I said this, but it is an uncapped benefit, which is incredible. If you make $600,000, that's your 12-month look back, then your loss of license benefit is $300,000. That's incredible. So that is, I believe, in my opinion, John, pretty industry leading, but nonetheless, it's a game changer as well. So we're going to talk today. I'm going to talk first about the taxable loss of license benefit, and then you're going to talk about the non-taxable loss of license, what the imputed income is. It's a mystery to all of us. So you're going to explain that to us in easy to understand language. But the taxable loss of license, if you do nothing as a Southwest pilot, in other words, no selections. You don't change your selections during open enrollment, the Southwest Airlines open enrollment, which happens every fall. If you do nothing, you're going to receive a taxable loss of license benefit if you lose your medical. Okay. One of the ways, if you're curious right now, hey, I don't know what I selected. There's two ways to tell. One of those is on your pay stub. If you pull your pay stub up in the lower left corner, you're going to see, or excuse me, if you see the words loss of license non-taxable benefit on your pay stub, that means you're receiving imputed income and your benefit will be tax-free. Okay. If you don't see that on your pay stub, if you don't see anything about loss of license, then your benefit will be taxable. The other way to do that, John, is on the benefits summary. You can go get that on SWA Life at any time and you can see what your setting is there. So, John, real quick, I'll try to give, the 30-second summary of what it might look like to have a taxable benefit, loss of license benefit. So let's just assume that you make 400,000. So basically, if you make 400,000 and you go out on, you lose your medical and you're going to get a taxable benefit. So your pre-disability income then is 400,000. Your loss of license is 200,000. And the hard part here about giving numbers is we're making a lot of assumptions. We're assuming that, we know that you're taking the standard deduction, that you're maybe married filing jointly, that your spouse doesn't make income, and maybe you don't have a state tax. We're making a lot of assumptions here, John, but let's just assume that plain Jane scenario, standard deduction, basically someone there's going to be in the 22% marginal tax bracket, probably. They're probably going to have an effective tax rate of in the mid to upper teens, let's say 17%. Again, that depends on a lot of things, so don't hold us to these numbers because we're just trying to give an idea. But if that were the case and you had no state taxes, then your $200,000 benefit per year, which would be about 16,667 per month, Of that, you would probably pay about $2,500 in taxes per month. So that takes your $16,600 benefit and takes it down to about 14,000. So that's what it might look like if you had a taxable loss of license benefit. And we've done a lot of these analysis, John. You and I looked at a bunch of numbers, and it varied anywhere from 2,000 a month in taxes to 3,000 or even more, 3,500 a month in taxes, especially if you had a state tax to add on there. That was a lot of numbers, John, but
Oh,
anywhere from 2 to 3,000 or more per month in taxes is probably what you'll pay if you have a taxable loss of license benefit. So hopefully that helps people just kind of get in their brains numbers they can hang their hat on, because again, there's a ton of variables there. So hopefully, John, I did that clearly and concisely without any visuals, because that's not easy either. John, can you just take us through what it looks like for the if someone decides to select the tax-free loss of license during open enrollment, what can they expect? What does imputed income look like? What does it mean? And can you give us an example of that?
yeah. So in this example that I have here, we have $396,000 of MBE pre-disability earnings,
Mhm.
which gets you a $198,000 with 50% as your benefit annually for loss of license, which that comes out to about $16,500 a month, tax-free. Now, the imputed income is 16,434. And the way we get that is it's $4.15 per $100 of wages is the current rate for imputed income on the non-taxable loss of license. So what you would actually be paying, because you're not paying imputed income, you pay taxes on imputed income,
Yeah.
is $3,944.16. And that's based on a 24% tax rate.
Yeah.
So all that is taking 24% times that
Okay.
16,434
Perfect.
number.
Well said. Like, so if I'm a pilot at Southwest, I look at my pay stub, I see in the bottom left, I think it is, loss of LOL tax-free benefit is going to be the title, and it'll have a number there. That number is that imputed income, or what's sometimes called phantom income. You're not receiving that income. You're not paying that bill. That's not a premium, but it's in your pay stub because, like you said, you will pay tax on that number. And so that's what you've illustrated in this scenario. The taxes that you might pay annually would be about $4,000. So, and that tax, that imputed income is uncapped. It could go, the rate, I think you said $4.15, that could go up. And it probably will go up in 26 a little bit. And the higher income you are, obviously, it's not going to be capped like it used to be in prior contracts. It was capped. So you make $1 million and you're gonna pay $4.15 per $100 of $1 million. And that will be your imputed income, I should say. So that's very confusing. Hopefully that helps. If anybody has any wants any more specific information or go over their specific situation, give us a call or email here at Leading Edge, Jonathan at leadingedgeplanning.com or Charlie at leadingedgeplanning.com. Just want to throw that out there real quick. Shoot us an email. Okay, John, what else on the loss of license or imputed income topic? Anything you're thinking about there?
How about long-term disability A versus B?
Yeah.
So long-term disability A is an extra 10% on top of your 50% loss of license, and
Mhm.
long-term disability B is an extra 15% on top of the 50%
Mhm.
loss of license. Now, long-term disability A, effective right away at the same time as your loss of license, that is. And then long-term disability B, that extra 5% over the A comes into effect on that seventh month of
Mhm.
disability.
Yeah.
And it does cost a little bit more. So in the scenario that I have shown, it's $312.50 for your monthly premium and then for B, it's 524.70. So, the B is a little bit more, but you have that extra benefit. And the long-term A and B are both tax-free.
Yeah. Always tax free, right? So there's no
Always.
switching on or off on the taxable tax free on these. And just to fill in a couple fillers here, as far as long-term disability A, maximum is $2,500 a month. And John, what's different about this contract is that a lot of times people go, hey, that's not that much of a benefit compared to last contract, but it actually is because the last contract, long-term disability and loss of license were kind of dovetailed there. Whereas this one, both of them, A or B, whichever one you select, stack on top of loss of license. And so again, for most of our senior FOs, captains, they're going to be maxed at a $2,500 a month benefit for long-term disability A. And then for B, it takes a lot longer to get to that maximum, but that maximum is $6,300 per month. That's the maximum, or 15% of your pay up until that maximum for long-term disability B. So those are a little confusing because, John, it used to be short-term A, short-term B. Forget all that stuff. Short-term disability is one thing now. Now we have long-term disability that has A or B. And like you said, B is the higher benefit, also the more expensive one. I think the thing that you mentioned there quickly was that long-term disability A and B are exactly the same thing for what, the first 6 months? Is that right?
Yep.
And then the seventh month, if you're still disabled, then then long-term B, if you have long-term B, will go up to that 15% of your pre-disability income versus the 10% of the
10% or
10% for
$2,500.
A. Yeah. So hopefully that helps and makes sense, but that can be confusing. So what do you think though? Like somebody wants to know, how do I make this decision? And I mean, that's the toughest one. And I'll give it my 2 cents, John, and then you can pile on. But what we do typically is we just pull out the spreadsheet and we go, here's your situation. Here's your pay rate. Here's your typical trips for pay, whether it be 110 or 15, whatever. And here is what you would receive if you were disabled. Between loss of license, whether you got a taxable, tax-free benefit, do you have A or B? Let's just simulate that. This is what you would receive. We also simulate and calculate the non-elective contribution that comes with those, which is tremendous. It's incredible benefit, but obviously that's meant for savings. So we'll leave that aside for a minute. But we show those numbers for someone. Let's say, hey, you're disabled. You have loss of license and long-term disability B. What is that benefit? Let's say it's 20,000. That benefit's $20,000. We just present that to someone and we let them, because they know their budget better than we do, John. And I think that's the most important thing as a Southwest pilot or a family. You need to know, hey, if something happened to me, how much money would we need to make our monthly budget work comfortably, right? And if it's not comfortable, if you go, oh, that's going to be tight with long-term A, then maybe think about considering the long-term B so that you have a little bit of margin there in your personal finances. And so that's the way I think someone should decide, is based off what's their lifestyle? How much money do they spend? Are you spending well below what you currently earn? Then A is probably sufficient. Do you have a military pension? That helps. Do you have a working spouse? That could help. And you may not need B, but if you're no pension, no spouse working, maybe susceptible to some kind of disability, then B might be the way to go for sure. So, depending on the circumstances. John, anything to add to that?
Now, it is very hard to switch from long-term disability A to B, we've heard, so they can be very picky. So that you do have to go through a health evaluation to switch from A to B. So that is one important thing to note.
Absolutely.
Yeah.
That's real good, John, because when this first came out and the contract, opened, I think they opened this enrollment early in March of 24, if I remember correctly, and there was no health statement requirement, but now there will be. If you want to switch from A to B, there will be either a health statement. I don't know how they do it exactly, what they look at, but they're pretty picky, as you said, and what we've heard from our other pilots. So hopefully that's helpful. Again, please reach out via email. You can call our office too at 865-240-2292. Ask for me or John, or select the me or John button, me being Charlie, and John would be on there as well. So give us a shout and email. We'll be happy to help with any questions that you might have if you want to talk about your particular circumstances. Also, please share the video if you know somebody that could benefit from it. Share it with them and help us to reach more of our pilots and help as many people as we can. Thank you very much.
Leading Edge Financial Planning, LLC is a registered investment advisor. Advisory services are only offered to clients or prospective clients where Leading Edge Financial Planning and its representatives are properly licensed or exempt from licensure. For additional information, please visit our website at www.leadingedgeplanning.com. The information provided is for educational and informational purposes only and does not constitute investment advice, and it should not be relied on as such. It should not be considered a solicitation to buy or an offer to sell a security. It does not take into account any investor's particular investment objectives, strategies, tax status, or investment horizon. You should consult your attorney or tax advisor. The views expressed in this commentary are subject to change based on market and other conditions. These documents may contain certain statements that may be deemed forward-looking statements. Please note that any such statements are not guarantees of any future performance, and actual results or developments may differ materially from those projected. Any projections, market outlooks, or estimates are based upon certain assumptions and should not be construed as indicative of actual events that will occur. All information has been obtained from sources believed to be reliable, but its accuracy is not guaranteed. There is no representation or warranty as to the current accuracy, reliability, or completeness of, nor liability for, decisions based on such information, and it should not be relied on as such.